So right now, upon breaking that specific area here, the necessary amount of liquidity required to continue with the rally has been reduced, because remember that as the market breaks above this area here, those short positions that were located here are now rendered obsolete, because what? The market has taken out potential sellers. It absorbed their sell positions in order to continue, in order for the market to continue with the rally. It had to absorb the necessary sellers that were located here, because remember the buy, when they were coming into the market, the buys, when they got into this specific area and found sellers resting here, they had the necessary liquidity to continue with the rally. But upon breaking above this area, now there is a shortage of sellers, isn't it? There is a shortage of sellers. If there is a shortage of sellers, that means the entire market is dominated by buyers. Do you guys understand? Upon breaking above this entire area, in fact, let's start it from a simple area, right? Do you guys follow? I feel like you guys are not following me. Let me go back. I'm very patient. Look at this thing here. We have this, right? We have this. I want to show you something. We have this. So we had this. You can even just put it here. Let's put it here. We had this, right? Are we following? So upon having these things, remember that the energy required for the market to break out of this specific area here, it was intense. That's why each and every time when the market approached this area, failed to break it, failed to break it, failed to break it, failed to break it, and eventually it did break. But upon breaking above this area here, now you're faced with this task again. But remember that at each and every level, as long as there is a specific area that consists of historical data that traders can use as a reference in order for them to validate themselves into taking positions. Therefore, when price gets into this area here, there are traders that are available. Similar as this area here, there were traders that were available that resulted in institutional players having the opportunity to do what? Order splitting. Right? They scaled in. So now when the market approaches this area here, remember that the necessary amount of liquidity required is present here, because those that have seen the market breaking, they were waiting for the retest. So now you've got more traders coming into the market and considering those short positions. So the short positions that are present, they are able to give the market a push to the upside, as now you've got more people to buy from. You've got sellers coming into the market. Therefore, there is someone that you can buy the product from, because they are willing to sell it at such a low price, provided that this was an area that was expensive and they saw it decline. It became a bit expensive, but it was reducing in value. So upon reduction in value, price, when it came here, the same asset is no longer priced at the same price. This was the most expensive price, but this, compared to this is cheap. So you are coming in, you have been buying it at a cheaper price, So what's this to compare to this? It's nothing. So now you have accumulated enough of this thing that it has generated money for you. So you are even willing to buy it at an expensive price, because you know it is expensive relative to this. Sorry. It is cheap relative to this, but it is expensive relative to this. Are we okay? You have to follow. This is not the time to be texting your girl. This is the time to be focused. This is not the time to be playing games on the phone. This is not the time to be texting. If you are texting, let's just leave it there. Right? Those that are married, it's not time. No, I know. Don't worry. I relate, guys. So Now, when we are looking at this area here, we'll be looking for a potential push to the upside, right? So what occurred is that the market had the necessary liquidity to continue. There will be a bit of a rejection, but the market requires to continue pushing to the upside, because now those that are coming in this area here, they're generating the necessary liquidity required to continue with the rally. So we see in the market continuing to push to the upside, but each and every level provides an obstacle. There was rejection here. Each and every level, it will provide an obstacle within the market. Each and every level here, if you can go on a lower time frame, you will see multiple rejections here. Similar situation here where you saw rejections here, because now there are traders that say, no, we can't go as high as this level here. This is the furthest we can go. Similar situation occurs here, but the market continued to rally, right? Because there's always traders that are willing to sell at a specific level. But now when we break above the all-time highs, there is nothing. You look you look to your left, absolutely nothing. Then what do you think if a new trader comes and sees the market breaking above this high, all-time high? What will they do? What will they do? They will buy, right? So once they buy, the market is dominated by buyers. But those that have had their long positions at around these areas here, they do understand that at this particular moment, I am just simply earning interest. But I'm not satisfied with just any interest. What I want to do is that I want to add more positions so that by the time I reach the intended target, I at least have multiple positions that will allow me to take profit at any price level that I chooses to, as long as it's above this area here. Now this area here is a new high. Thank you, Remo. That's why price is the least important. So you guys see this. Yes, I want to continue with the rally, but I'm in a market that is dominated by buyers. So the only thing and the only logical thing that I can do is become a seller, because this thing, it's in demand and I possess majority of it. Let's just put it in that case. I possess majority of it because I bought it at a cheaper price. So I've got tons of gold available in my storage. But this thing, it's increasing in value each and every time. But how about, because I'm currently in charge of the market, let me just put it this way. I've got a certain control, or I can monopolize the prices in which I want to sell it by. So once we get into this specific all-time high, I see that the market is dominated by buyers. So the only logical thing to do is do what? Sell it to them at a higher price, but I bought it for 2 rand, but here it costs 10 rand. So if I dump most of my things or my possession of gold, it will, seeing it that there are fewer sellers. Therefore, when most people are selling a specific asset, wouldn't it reduce in value? Because picture if there's a gang of us, we have something that is being regarded as a high commodity, or as something that is being regarded as of high value, and automatically we start dumping it. Picture if right now, for example, we have seen, is it PIFA or what, the ones that were creating a vaccine, we saw that majority of their shareholders, they were selling their shares. Wouldn't that kind of like suggest something is wrong? And when you start seeing majority of people starting to sell the specific asset, like you start wondering, you start questioning, like, why are they selling it? And if you are holding it, you kind of like fall into that fear of missing out. You will sell it as well because you don't want to see it reducing in value. That's why we saw, like, if you can look at Bitcoin, there were some cases where guys were like, I regret selling gold. I regret selling my Bitcoins, because like after it retraced, it shot up. Thank you. It's the net traders' behaviors, the net mentality, how traders behave. Yeah, it's a group mentality. Thank you, Jackson. Right? So once you start seeing, I see Lauren Lynch dumping their gold. I see another big company dumping their gold, and I see a lot of people starting to sell their gold. So would I hold those positions? Definitely not. I'm going to feel the need to do what? To dump some of it and just say, you know what, let me at least make profit from this because I've been holding it for so long. So once that thing occurs, now the print of a bearish candlestick, that's where now traders say, hey, maybe this thing is a sell. So now you've got net traders coming into the market and also selling that specific asset. So those that even bought, remember those that sold when they taken out, they added liquidity into the buy side, and those that saw the candlestick reversals patterns occurring, they now start to sell. And those that have their positions here held on a buy, they start seeing the market reducing in value. They say, hey, and some of them get hurt in the process here. So those that are buying, they bought at a higher price. Now they get taken out. They automatically add liquidity to the sell side. Like right now, things are in favor of sellers, right? But they fail to understand that for the market to continue on the rally, there is something that needs to occur. Because now, as the market continues to push up to the upside, the more the retail traders start taking the direction of the institutional players. And once they start taking the direction of the institutional traders, now the problem starts, because now the institutional traders are not able to scale in. And for them to be in a position to scale in, they will have to take profit from their initial investment. And the depth of how deep of a profit they are willing to take, it depends on the amount of traders coming into the market and taking position in the same direction as them. So that's why we end up seeing the market making a bit of a deeper retracement. Therefore, we say that the depth of the retracement depends on the amount of traders coming into the market and placing trades in the same direction as the institutional players, therefore allowing them to take a deeper profit. The very exact profit that they would take at this particular area here are the ones they're going to use in order for them to continue with the rally. Are we okay? Or am I speaking too fast? Paul says no. What have I said that doesn't make sense? What did I say that didn't make sense? Okay. Okay, so right now we're seeing the market making a bit of a reduction in value, right? So right now we're saying that we want to see the market coming into this area and tapping into this before we can consider solid long positions. And when I say solid long position, I'm saying that here we hold and we just add more position as price moves. Langwa, bana besho, bana ba kgomo. Don't worry, guys. Do not worry. Do not worry. I have your back. Okay. So when we say that, so right now that means we're looking for a deeper retracement, right? Because evidence has proven to us that. Let's go on a weekly time frame. So looking at the market on a weekly time frame, okay, we have been pushing to the downside, retracing in the form of a corrective phase, or like if you want to put it more nicely, you can say we have been in a bit of a consolidative state in the form of a continuation pattern. But upon this thing, there is something that we are seeing here. The market continuously pushes to the upside, but in a bit of a consolidative manner, right? So if it does in that means that the necessary liquidity required for the market to continue rallying is doing what? It's fading out, right? It's reducing. It is reducing. Are we okay? The necessary amount of liquidity required to continue with the rally, it is reducing. It's not increasing, but it is reducing. If I were to tell you that these structures are the inverse of one another, would you agree or disagree? Would you agree or disagree? If I were to tell you that these two are an inverse of one another, if I were to tell you that these two are an inverse of one another, they are an inverse of one another, just that like you will fail to recognize them because the amount of time you spend with your charts, it can be a bit smaller, right? So you can actually see the patterns on how the lack of momentum plays a key role in terms of determining if the market is going to continue with the rally or not. The way the market retraces tells you more about the future of that specific currency, but sometimes it doesn't work okay that way, but in most cases it does. It doesn't have enough, right? This is, yes, it can be regarded as a correction, right? Now let's move on to a date. Now we understand why we need to push to the downside, isn't it?